Today we are looking at another great oil stock here. We are looking at BP, British Petroleum, ticker symbol BP, and we're going to see if it's still a buy in 2021. And let's just have a look at the stock price over the last year. You can currently see it is at $27.60 a share, up 1% on the day. And let's just go back to a year to the day. You can see that the stock has been up and down pretty much, lows of around about $20, and we're about its high over the last year, but this is not the full story. We want to go back to the pre-pandemic numbers, and that could get us back to around about $40 a share. So currently trading at a massive discount. I was buying BP down here, and great opportunity for me. Very lucky I picked the bottom and was able to ride it all the way up to $27, which was excellent. But we're not going to talk about what I did. I want to show you some good things about the stock. So let's have a look at my steps. BP currently has a 152 billion market cap, energy sector, and as I said, $27.06 a share. It pays a massive 4.75% dividend, which is a lovely dividend you get. The ex-dividend date was in August, so the next one will be coming up in the next couple of months. So let's have a look at my steps. Firstly, is the P ratio less than the market? Yes, BP is a profitable company, as we'll soon see, and has a a P ratio of 10.75, so that is a massive pass. Is it less than the sector? No, the energy sector has quite a low one with 8.2. That number seems very low to me, considering that there's companies like Exxon and Chevron have very high P ratios, or some even aren't even profitable, but BP is profitable, so that is a failure, but I wouldn't be too worried about that one at all. Next is the revenue increasing. Now this is over the past 4 years, and it's gone from 300 million to 199 million, so that is a fail, but that doesn't tell the story again. We want this to get to its pre-pandemic prices, and we want to see that the revenue is increasing again. So yes, it was 240 million 2017, 300, 280, 180 during the pandemic year, and has increased 20 million. So fail over the last 5 years, but a plus over the last year of the pandemic. Next, we want to say, is the profit increasing? No, it's not. 9.3 to 8.6, but once again, a profitable company. And if we go to the financials and look at the net income, they were, well, actually 3 million, 9 million, 4 million, minus 20. And now it's 8.6 billion. I think I said million there, sorry, that is a billion. So they were minus 20 billion, and they've turned that around, 28 billion in profit from that point, and is now at 8.6. So that is a massive increase. So once again, it failed according to this model, but I think that's a very good sign. Can we get a like on the video? Really helps me out, and it'll help people find this video, because I think this is an excellent stock and can continue to get back to its pre-pandemic prices. Next, shares outstanding decreasing. No, these numbers are backwards, apologies. It's actually increased. They've increased it by about, well, you can see it went from 3.2 to 3.3. So they have been issuing shares, probably to generate some cash as well. Not a massive increase, but still bad that they've done it. And finally, is the free cash flow increasing? Yes, funnily enough, it has. 6 billion to 8 billion. And bearing in mind, this is including the pandemic. Let's just go to it anyway and have a little look at the cash flow, and then scroll down. You can see that 2, 6, 10 minus free cash flow, and then the positive again. So that is good growth signs. Excellent news again. So 2 passes, free cash flow ratio of about 19. I would say that these in the short term are very good as well. The revenue and in profit is in the right way, and I imagine they've stopped issuing more shares in the future as well. Probably just some short-term capital increases. Then we want to look at the valuation. So this is discounted free cash flow, buffer Graham intrinsic value. Let's have a look what this says. So off a free cash flow calculation, increasing the free cash flow over the next few years, this gives a calculated stock price of $35 a share, which means it's trading at a 28% discount. So according to discounted free cash flow, the stock is a buy. And another good story here, if we look at the buffer Graham intrinsic value, which takes the expected growth. Now this is the expected growth over the next couple of years. Future growth, they are expecting a decline, so I'm going to be a bit bullish here, but I am bullish on the stock. That has a fair value of $55 a share, which if we go back to here, that would take us well before the pre-pandemic amounts. But the key thing is it has a Graham price of $41 a share, which basically means at its current price, it's a no-brainer. So that is excellent to see. So they're both buys. saying that it's currently undervalued. I mean, as much as 100% of a discount. I don't know if the stock will double because it hasn't been $55. I don't think in quite a long time. 2014, not that long ago in the grand scheme of things, but the stock is definitely on the way up and can get to its pre-pandemic levels according to the free cash flow and the Warren Buffett intrinsic value. One other thing that I think is always useful is if we just look at some indicators. So let's just look over the last year, not the last, sorry, not this one. Why isn't it changing? Oh, there we go, that's more like it. It wasn't changing there. So you can see the dividends, August, November. So, well, the next one will be coming in November, round about back end of October, and then the dividend will be paid in November. So definitely buy it now if you want that dividend. Earnings come up in November as well, which is a similar time, but we're not here to look at that. We want to just quickly look at some technicals because I do enjoy looking at them. So let's just get a moving average. Ones I like looking at is we'll first look at the shorter term averages, the 50-day, and then let's add another one on here. Let me just duplicate it, and we'll also do the 100-day moving average, and we'll make that a different color just to make it easier. We'll go blue, yellow, and then we'll save that. And we'll also add in the 200-day for the longer term picture, and we'll change that one to red because it's the longest. Inputs, I've forgotten just how you change it there. Settings. There we go. Inputs length is 200. So now we've got our 3 lines, 200-day in. Oh, let's just change this one to green. Why not? Why not? Sorry guys, I know this is a bit, but it should have prepared this ahead of time, but well, we're doing it live. So you can see here, it's the 200-day has been acting as a bit of support recently. The 100-day, it is broke through that as well, which is bullish, and broke through the 50-day. So according to these signals, in terms of momentum, it's got some very strong momentum because the price has crossed all 3. That's definitely a golden cross. So that is very, very good sign in the short term. It's definitely on the rise. You want to buy and do a quick trade on this. Other indicators, I'll have to close these down because I have the free version of what's this called? I was going to say Trading 212, but that's not the right thing. This website, I shouldn't know what it's called. I use it every day, but I've forgotten. Trading View, there we go. We'll look at the MACD here as well. MACD is useful, see what that's showing. And you can see here that the MACD and signal lines have crossed, which would say it was a buy signal back in September. So you would have bought at that point, made money all the way. And if we look at the stock, it kind of goes in peaks and troughs, ups and downs, ups and downs, ups and downs. So you might want to wait for this price to go back. Wait a little bit longer for it to revert back to the zeros here, and then you would look to buy here. I mean, if you bought at this point when they crossed, you would have also made some good money. So MACD I like to look at. And finally, we'll just look at the RSI, Relative Strength Index, see if the stock is in overbought ranges, which it is. Unfortunately, it is at the upper end of the overbought range. So as per this line, it would recommend that if you sold at this point and then bought at the bottom, you would have made some good money and sold. So according to the RSI, it's probably best to wait a little bit. Now you would miss potentially on some short-term growth, but if you want to use that as your main indicator, but I think you want to look at all of them within combination of the fundamentals. I think if you want to buy and hold, I think this stock does look good. But in terms of technical analysis, there's definitely some money to be made on this as well. Right, guys, thanks for watching. Please give a like on the video, and I'll catch you guys next time.